All right, good afternoon now, folks. As we head into US trade on Wednesday, the 4th of October. We'll flick across the headlines. Bit of a changed picture from this morning. Had a bit of a bounce back in stocks, but a downside in the US dollar. Solid bounce back in stocks globally. We'll have a look at we had some data ADP employment change out of US about 45 minutes ago now at this point, but markets did have a little bit of bounce back before that, which is obviously against the trend. Well, job openings higher than expected yesterday, weak employment numbers today. Does that set us up for a weak NFP and unemployment rate rising on Friday? Obviously that remains to be seen, but certainly it's kind of how it's looking as we head towards into US trade today. Obviously pound gains as dollar takes a breather, but sort of US dollar a bit negative in today's session, which I mean obviously trends do not last forever. I say trends do not last forever, but they also don't move in one straight line. They do have peaks and troughs. Obviously, you cannot just keep going in the one direction every single day. So not to be unexpected. Obviously, pullbacks happen on every trend, but a couple of opinionated articles. World's biggest bond markets hit by relentless selling. Fragile yen picks up as intervention chatter runs rife. Dollar slip. Seemingly, there was an article on Reuters earlier on seemingly suggesting that there was no intervention from the Bank of Japan, as there was I mean a bit of information that they had studied did come over and suggest that money market data showed on Wednesday that Japan likely did not intervene in the currency market a day earlier, as the current account balance was projected to be within market estimates. So, when you take that into consideration, Reuters information showing the current account balance, or the current account balance, was projected to be within market estimates. I think that is interesting. I mean, that's a solid move. I mean, it looked like intervention. I would have bet my house on it being intervention. Still got no confirmation either way. Japan's finance minister refused to declare whether they did or did not intervene in the currency yesterday, which was, I mean, it makes it even more crazy if there was no intervention. I mean, 280 pips in 5 minutes is a substantial amount of movement to the downside in dollar yen, and that move was pronounced across the Japanese yen. So yeah, it's maybe a bit of a tricky one to work out. Reuters are saying that the current account projected to be within estimates. It's a bit of a tricky one, but again, we've got no clear cut answer either way. I mean, you'd have to imagine the market heavily long dollar yen, heavily short Japanese yen over the course of this year to date. Now, is that just an unwinding of positions? I don't really know, to be honest with you. I would have bet my house on it being intervention yesterday, but seemingly it's a bit up in the air as to whether it was or was not at the moment. So, again, we'll have a flick across here. Japanese yen has stabilized somewhat, a little bit negative in today's session, maybe off the back of that report, but you can see stock indexes have turned around. They were red across the board this morning. Now majority are green. US equity futures, European equity futures, green across the board, apart from the FTSE, which is pretty flat. Asia Pacific equities, the majority of them higher at the moment. Oil, bit of downside, maybe alleviate some pressure on kind of some inflation worries. Oil continues its pullback back from 96 down under 88 now at the moment, but stocks higher, yields then lower. Yields in the US certainly have pushed lower, and you can see the US dollar across the board, bar the Canadian dollar and the Turkish lira, which we'll leave that one out. It is relatively negative across the board today. FX is a bit mixed. Sterling has had a bit of a bounce back, a bit of a push higher in the price of sterling. I mean, no kind of clear-cut reason for that as of yet, apart from this services PMI beating forecasts, but still is below 50. So, I mean, we're gonna put it down to that. But is that really the most positive number in the world? No, not really. I mean, you can see the way it's trending. It's still trending lower. It's BS myself. I mean, a bit of positivity in sterling. Is it really off the back of that though? Remains to be seen. I'm not so sure, but we'll put it down to that. If you would like to choose something to suit the narrative. PMIs across Europe today. Spain's positive above 50. These are all services PMIs, but Spain's positive above 50, above consensus. Italy's zero point 0.1 below 50, still above last month, so not too bad. France is beating estimates. Germany's beating estimates above 50. The Eurozone as a total beating estimates, albeit slightly below 50. So a bit of positivity in across Europe this morning, bit of positivity across the UK. Again, a small majority of them are below 50, but majority of them are also beating consensus. But where it gets interesting for me is this ADP employment change. It is the private sector version of non-farm payrolls. You can see last month 180,000 consensus, 153, but an actual figure of 89,000. Now that is an extremely bad figure. One of the lowest prints since the COVID crisis. Back in 2020, obviously the massive drop in employment, massive spike in the unemployment rate. That is not a good figure, down at 89,000, and this trend continues lower, as you can see. Keeps stepping lower each month. It'd be hard to imagine it gets much below 89 the next month, but a downtrend in hiring across private businesses has continued. Now that does bring us on to NFP on Friday, 1:30 on Friday. Are we expecting a weak print on that? You'd have to imagine, but the job openings pushing higher, ADP figures today lower, does set itself up for a bit of a negative print on Friday's Friday's numbers. But you can see the S&P, Dow Jones, and Nasdaq and the Russell have all had a bounce back. You can see the DAX, Euro stocks both having a bounce back. The FTSE not really getting the same gains as the rest of them, likely due to the fact that sterling has popped higher. But the biggest mover in today's session is these yields. As you can see, the 10-year and the 2-year especially has had some solid downside in today's session so far. Big downside in the 2-year yield off the back of those ADP figures a short while ago. That again is likely to prove supportive for stocks, but it's always a bit more of a tricky one to read into stocks. Obviously, rising unemployment stops the Fed from hiking interest rates, but rising unemployment is not good for a stock index. Where it becomes a little bit easier is when you look at the US dollar, and you can see pretty solid downside over the course of the last hour in the US dollar. You can see euro popping higher, sterling popping higher, Aussie Kiwi both popping higher. You can see then dollar Swiss, dollar CAD, dollar yen popping lower. Dollar yen doesn't really know what it wants to do just yet. Be interesting to see whether markets shoot lower below that 148.70 that we were looking at earlier on, or does it go back up and try and test that 150 level again? We got no confirmation as to whether it was or was not intervention from the Bank of Japan. Reuters say the current account doesn't suggest it was. My opinion would be that, it's a massive move. Still, even after reading Reuters report, I still struggle to believe it's not intervention. But if that's what the research that they found, that's an interesting topic to think of going forward into the rest of today's session and in throughout the rest of this week. But ultimately, yields having a bit of a pullback, likely to be negative for the dollar, does alleviate some pressure on stocks. But for me personally, do you continue to play a bit of a bounce back in stocks to get back up here and reverse some of this trend? I don't think 43.20 looks like a bad idea on the S&P 500. A bit of a resistance level now at 42.40. Break through that, it looks prime for a bit of a test up at these sorts of levels up here. But if these yields continue lower, I think short US dollars is probably the way to play it into the US session. You're going to short US dollars, maybe dollar yen's a decent one to back, but it has come a long way. The US dollar, there's now a genuine reason for a pullback. ADP's come in negative. Job openings yesterday come in higher than anticipated. That sparks a pullback in yields, which is a legitimate reason for a pullback in the dollar. Does it change the trend too much? I would suggest not yet. We're going to have to wait for NFP and that to come out on Friday, but I would once you take into consideration the trend, the massive uptrend that we've had on the US dollar, you do need a pullback at some point. There's now a genuine fundamental reason for a pullback. I think that's probably not a bad bet into the US session today. What asset you choose to pick obviously is is a little bit tricky. Dollar CAD not doing too much. Oil having downside. US dollar having downside. Not too much to see there on the price of oil. Euro dollar and cable look like they want to push higher. Dollar yen is that short through that level back towards these lows, remains to be seen. But the fact that you've got those prints come out negative, this services PMI is another one to keep an eye on. Certainly if that at 3 p.m. today comes out below consensus, that is a good reason to get some short some US dollars on a short-term basis. Obviously you don't want to hold them at too low. Obviously on a short-term basis with the prints we've already seen, you probably expect a weak NFP print and a weak unemployment rate on Friday is a decent hold into Friday and into next week. That's maybe not a bad bet. Long US dollars on the back of weak economic data doesn't seem like the worst idea in the world coming into the second half of this week.